Rather than have 100% of nothing, we then said we'll have 50% of something. People didn't really want to leave because they thought of it as one big family and they all banded together and there was a lot of innovation in there.
Hirander Misra,
GMEX
CEO and COP28 winner,
disrupts climate action by merging fintech and blockchain to revolutionize carbon credits as a top 100 influencer.
But the number of startups that are hitting the wall just because they've gone everywhere. They've kind of gone off-piste. Other than the Southern Cape, power is a big problem. So we decided to work with a brand new registry to register those assets. Again, it was on Polygon, but it could have been any blockchain. All of a sudden, you could see the origination of that data with the carbon credit all the way through to market. I always go for things that are very difficult to do because
our planet is a remarkable and exceptional wonder. Yet the way we humans live on Earth has caused the environment and the climate to change, and not for the better. What would it take for us to stop and take stock of the pressure we place on our natural resources? And that's what I want to explore today. And as an environmentalist, 20 years ago, I discovered that there needs to be a trade-off between people and planet to protect it. I believe saving the planet needs to be incentivized, and that's what I've discovered. If nature was, let's say, a startup, what ROI would we expect from it? What's in it for me when it comes to saving the planet? What's in it for me if I was to invest in a project that gave me, for example, clean air? Clean air to breathe. What's in it for me? The answer is clean air. But it's not enough. What's in it for me if I invested in clean energy? Anyone? Clean energy, but lower carbon emissions. But again, that's not enough. What's in it for me if I invested in a water project? Clean water project. The answer is clean water. For the children. For the children. But even that's not enough. So let me take you quickly on a journey where I discovered that it was never enough. If you want to do good, it wasn't enough just to invest your time and money in something. You needed a payback. It was about 20 years ago, I was invited by the Minister of Tourism of Uganda to explore a project. Now, the challenge they had was that they had local people, local villagers, who saw foreign tourists go up a hill with their packed lunch. And they'll come down with big beaming smiles. And they felt the tourists were going up there and mining gold and diamonds and taking all their precious gems and leaving. That's what they thought. So we had to change perception because what they were actually doing was visiting gorillas. But when we went there and we told the locals, they're just visiting gorillas. We organised a gorilla trek, they're visiting gorillas. They're like, why are they so crazy? Who would do that? Why would you? He says, as villagers, if we see a gorilla, we run a mile. If you see a silverback, they'll pummel you to the ground. You just wouldn't want to sit next to them. Yet we want a picture sitting right next to the gorilla. So we had to change his perception. Now, the way we did that was, you know what, we're going to screen documentaries of why us Westerners are crazy and love gorillas. Mm-hmm. And so we chose David Attenborough's documentaries. BBC sponsored the footage, and we said, right, we're going to screen this in all the schools. And when we looked at the project, assessed it, we got the footage, had the projector, and guess what? In rural, deepest, darkest Uganda, there was no electricity. So we had to innovate. So what we did, we took 2 bikes, strapped a dynamo, plugged it into the projector, and now we can project across whitewashed walls. David Attenborough sitting next to a gorilla. But we needed people to pedal the bike. And the bikes had to be pedaled for a good 2 hours solid at a certain speed, so there wouldn't be any breaks. So we turned that into a whole experience and asked tourists to come on, pay good money, £1,000 a week, to just cycle non-stop in rural villages. They loved it. So you've got this, the room was always alive with children laughing and exploring this. And you get the tourists sweating away, but loving it. The payoff that they had, they paid us for an experience, they got an experience of a lifetime. At the end, they got this big village hug. The payoff for them was a memory. They've changed their life, and they felt they did something for the environment. That was their return of investment, which I found always enlightening. The Guardian newspaper gave us an award for that, Best Eco Initiative on the planet at the time. But let's fast forward today, because in our midst we have a fellow eco-warrior in a different bit. Now, when I shared that story, there was a level of investment, there was a level of money that went into it, there was a level of innovation. But Hirander Misra, you've taken this to the next level. When it comes to innovation, when it comes to bringing, and I find that you've tackled climate change, and somehow you brought fintech into it, two worlds that shouldn't see each other. And so you've used an innovation like blockchain to do exactly what I did, save the planet, but on steroids. So I'd love to get started and hear it from you. So first, before I start, I want to list all the accolades this man has won.
It's going to embarrass me now.
I was going to, and I'm going to further embarrass you in a moment. But let's go for it. COP28 UAE TechSprint Winner, top 10 influential blockchain day in the UK. You remember these? UN Sustainable Development Goal, top 100 influencer, and most influential CEO 2024 for carbon credits, while being chairman and CEO of GMEX Group. Have I missed anything out there? This is a section in the talk which I call blow your own trumpet. Right. I'd love you to share with us your introduction of who you are and what you've built and the success that comes with it. And please don't be British about it and be modest, because what we want to do is share the successes and understand what you've built and the success, what that success looks like.
Trump's back now, so I'll be American about it.
American about it.
So coming back at least in January.
Over to you.
So it's interesting. My background's 28 years in kind of financial services, fintech. Had a lot of my early part of my career sort of bridging the gap between business and technology. And then everyone said it couldn't be done, but about 20 years ago we started a project to take on the major stock exchanges, and no one said you could break the monopoly of all the European ones for 200 years. They were doing what they did, and we ended up becoming the second largest market in Europe in 3 years. And then that was great because that was financial services. It was very disruptive, but I kind of said there's got to be more than this, right? Because it continued on kind of doing something similar, but then the epiphany was going back about 3-4 years ago when we started getting approaches for firms to set up climate markets, look at climate assets like carbon credits or water credits as a flux, not as a commodity. When I looked at it, I realized how broken it was, because the World Bank talks about a $2 trillion financing gap, yet the money's not really getting to where it needs to go. There's massive community impact. If it is getting there, it's kind of donor money. It doesn't really teach them how to do it or increase incomes. So that spurred us on to create an initiative called 013, which is the one that won the TechSprint award. And what we did with that was we realized it was interesting. Everyone's trying to do this in a very centralized way, like mainstream finance, but we realized actually the projects could be in Kenya or Ghana, and we are engaged with Uganda as well, but without the gorillas. I hope to see some soon. But at the same time, the money could be in Singapore or it could be in London, yet the demand for carbon credits or other types of assets that ensue could be in the Middle East because of oil production and carbon offsets, whether it's Aramco in Saudi Arabia. So the epiphany was we realized a lot of what we've been doing, and I've been involved in for the last sort of 10 years, from the early stages of blockchain, bridging between mainstream finance and decentralized finance, lent itself to as a really good solution to solve this challenge. So the money could get where it needed to go, but with transparency, and the value of that output, which could be a very large export commodity, carbon offsets for Africa and ASEAN countries, could get the best price and maximize the value. And that's why we created what we did. So there was no, it was kind of a merging of science on the one hand and finance on the other, which wasn't talking to each other really.
Yeah, excellent. Let's help break some of this down so everyone can understand certain parts. You mentioned 013. Other than sounding like a zombie apocalyptic movie, what's 0 and what's 13?
It's a good question. Everyone asks that, and herein lies some of the reason for the name. So 0 is in net zero. 13 is actually the UN Sustainable Development Goal for climate change, and then everyone said, why didn't you choose .ai or .io? I mean, we've got those domain names, but .net is in net zero. So it's a good icebreaker, actually. I mean, whenever we go in somewhere, everyone asks, what's in the name.
And you mentioned about the carbon credit market. Now, I always felt there was a discrepancy between the value of carbon credit that's generated in Africa and then one that's generated, let's say, in Sweden. Why is the Swedish one more expensive than the one in Africa? Yet it's still the same 1 ton of carbon.
Yeah, and just for the benefits of the audience who might not be into carbon, I was even explaining this to two ex-colleagues from the finance side last night. I was over a curry and they had a few beers, but even they were struggling with it because essentially 1 carbon credit is 1 ton of carbon saved from being emitted into the atmosphere, and effectively it's like a piece of air because there's been a lot of fraud in this sector, but how's this piece of air that's 1 carbon credit valuable compared to this, and did it really happen? So there's a source to sale issue on the one hand. So provenance and trust plays a great part. I mean, last year there was an article in the Guardian newspaper which spoke about kind of fake credits and greenwashing by companies buying them and credits that weren't fit for purpose. Some of it is a little harsh because some of these companies had good intentions. It's just the project developers were unscrupulous. But you had that with Bernie Madoff in securities. You had that in crypto as well with Sam Bankman-Fried and FTX, right?
Yeah.
So you're always going to have bad players, but they spoil it for the rest of them. But so greenwashing, double counting, where you're supposed to, as a company, if you're an oil company and you're emitting equivalent to your emissions, you're supposed to buy a certain number of carbon credits to offset those emissions. But that translates into effectively money coming into projects that generate carbon credits, many of which are in global south countries. I mean, the term I don't really like, but it's been coined by the World Bank, developing nations. Yeah. But the biggest challenge is there is a price discrepancy, you're right, between Western carbon credits and those in developing nations. There are accusations of carbon colonialism as well.
Okay.
I call it that. You've seen that on certain commodities as well, where the producer. You see this with coffee as well. So you might get 5 cents on the dollar if you're lucky at the farm gate. Coffee companies are buying as well, no matter how fair trade is an interesting benchmark, right? At the same time, the margins the middlemen are making, or those buying, the large corporations are making, is huge. So, you're seeing that with milk in the UK, where it becomes uneconomic, because of price squeezes. So what's happening is, there's a live example of this, and I'll explain the price differences. But we looked at recently a biofuel project in India. This is a community project, animal waste to energy project. So really good benefits for the community. Now, the community that were delivering that project was struggling to get $2 a carbon credit, and that's what they thought the price was. Yeah. Just by pure chance, we came across, and that's the problem. There's no real price for carbon, and that goes back to your original question. But just by chance, something landed on our desk with activity that had happened in the same project in Gujarat in India, and there was a project developer buying it for probably less than $2 because we're buying. A purchaser of carbon credits, but a middleman, a broker, buying it off the project developer for less than $2. They were selling it for £7 to another broker. That broker was selling it to clients to offset for £9, right? So all of a sudden everyone talks about the price discrepancy, but actually in reality there wasn't, if it wasn't for all of that bit in the middle. And that doesn't mean it shouldn't be economic, but actually there was too much value being taken out, which was making that project uneconomic. Technology can be used to kind of reduce that spread.
I was going to get onto that.
Yeah.
So you've discovered using something like blockchain, applying to something that can be so fraudulent with greenwashing and so forth. I've always been annoyed with the way carbon credits are distributed around the world, because you're almost paying for nothing, but there's many middlemen in between that are making a lot of money. So understanding the transparency and accountability, be able to, the provenance of that carbon has always been, that carbon removal or reduction has always been an issue. But luckily, blockchain kind of comes along. If you could explain to everyone, in your words, what is blockchain, and then let's explore how we suddenly integrate that and use that in the carbon market.
Yeah, it's interesting because everyone speaks about blockchain. We were talking about this earlier, ubiquitous technology. But actually there are multiple blockchains, layer 1, layer 2, public, private. Yeah, everyone kind of bans them the same way. And I'll explain what blockchain is in a minute, but unintended consequences, we spoke about blockchain, solving many problems, but actually unintended consequence, it's created even more fragmentation. And there's challenges, as some of those that are technical in the room will know about, kind of interconnecting that. It's an atomic problem as well, and that in itself has also created some issues. But effectively, it's a distributed ledger. It's no different, other than the fact that it's distributed the databases that we're used to when we're younger. Again, there's systems around this, designed for governance, and there's kind of wallets designed for key management. Everyone thinks, okay, it's an asset, you hold an wallet, but to manage keys so the assets are secure. But in essence, it allows immutability, it allows visibility of what you're doing. But the big problem is everyone speaks about blockchain as being the solution to all of this, like double counting or greenwashing, whichever way you look at it. But if it's garbage in, it's garbage out, right? So it depends on the source data. So a lot of these projects, or we've seen really bad assets being put on blockchain. It doesn't necessarily mean they're good assets, on the carbon side, but equally we've seen that with other assets. Now there's a move towards real world assets. I mean, it's interesting. This is an intangible commodity of sorts, and it offers an opportunity if done right. But that's where AI and other technologies come in, IoT.
Oh, there you go. And are you adding that into the 013?
Yeah, I mean, it's interesting what we're doing. We got so excited about this because, as we know, I mean, we haven't quite got to computing yet, but it's actually the classic use case. Everyone's been struggling on the finance side. You see all these announcements. I mean, this as well, Afsal, because you're involved in some of this, but there's a lot of hype around some of these announcements that are made, bond issuance on blockchain, and there's 50 million, but it's basically a lot of the bank's internal money that is being used in an orchestrated way to make a marketing announcement. There's no real sustainable value in a lot of that, even though some use cases are now starting to emerge. But everyone said security tokens, but if you look, there's no liquidity on them. They're non-standardized, whereas there's liquidity in crypto assets that are more standardized, just because of the way that you can trade them. Mm-hmm. So in that sense, I think offers an opportunity to use these technologies, but I've never seen any other use case out there that will allow IoT, AI, and blockchain to come together. Because think about, like, we did a project, and this is about collaboration. Actually, this is key because we do what we do well, but actually we're not experts in AI. Although we're trying to build capabilities, we're not experts with industrial measurement and IoT devices. But we did a project in South Africa, and this will show you the impact. Actually, It's interesting, mini grid solar, because South Africa is going through challenges where the utilities have kind of broken down. And everyone sees South African Airways, and you've spent time in that part of the world, and we've touched base in Mauritius before. But other than the Southern Cape, I mean, power is a big problem because of endemic corruption and the way that it's managed, really. So these mini grid decentralized kind of power grids are emerging in different areas. Now, what we've done is we worked with a local aggregator of those that had IoT measurement, because you can measure that, you can measure the power that's produced, you can measure the energy efficiency as well. Okay. And with using the IoT device, we linked that. They had the data linked to the Polygon blockchain. We integrated that into what we're doing, which is kind of built on Cosmos Tendermint. And then typically it takes 18 months and about $100,000 to get these projects verified so that those carbon credits are recognized as assets. But on a 50,000 a year project, it's not going to work, right? So we decided to work with a brand new registry to register those assets. Again, it was on Polygon, but it could have been any blockchain. All of a sudden, you could see the origination of that data with the carbon credit all the way through to market. And this is an amazing thing, because typical solar credits were going for selling in the market for between $1 to $2, depending on the type of credit. We got $4.50 for that, for the project developers, just by that provenance, because everyone buying it now knew with a level of certainty that this is credible, right?
Yeah. That's amazing. That is amazing, isn't it?
Yeah.
Excellent. Now, when you talk about all these things, blockchain, financial, looking at sustainability. So if we look at it, we've got blockchain technology, we've got sustainability, we've got fintech, and the way you deliver that and built it is pure poetry. But what I want to dig deep in this, going into the next part of the interview, is these worlds shouldn't really meet. The people that are dealing with like fintech and sustainability, to be able to put them together in the way that you have, and be these worlds shouldn't meet. Yet you have. I would say that is, for me, that's kind of your superpower, your mutant power there, being able to bring two things that shouldn't meet together to create such a seamless integration of technology and planet. So I'm interested to know, as an entrepreneur, where's that coming from? Like, where is there an experience in your life where you brought two things that shouldn't be together?
Yeah, it's interesting. So again, stemming from childhood, I mean, it was interesting, right? Because there were a couple of things there. I mean, one, I think I watched too much TV that was probably rated higher than my age. When I was about 5, I was constantly in front of the television, and I think all I did was watch TV, sleep, and eat. I think in the early part, I didn't really study much in those days, I was told, and I was quite mischievous. But it was out a year before I was born. But I remember I was very young watching the first Rocky movie.
Okay, yeah.
Right.
First Blood.
And it was.
Oh no, Rocky. Yeah.
Rocky itself, and I just loved the fact that he was an underdog, and against all the odds, when no one backed him, he won, right? Or gave it his best shot. Yeah, that resonated, right?
Yeah.
And actually, I when I was young, I used to play the underdog. In some ways, that's very interesting because I always go for things that are very difficult to do, because if they're easy, kind of everyone will be doing them. But actually it presents a challenge where when someone says it can't be done, like I remember I hadn't learned French because my parents had sent me out, even though the family's been here a long time, since 1948, my parents had sent me out to India for a couple of years. We were going to relocate, but we ended up coming back, and I'd missed 2 years of French as well. I'd never learnt it, and then I was kind of pronouncing French words with an Indian accent, and my cousin was like, which is interesting. I won't try and imitate that right now, but my cousin that was 6 years older than me said, "Give it up. It's not your cup of tea." I got so annoyed with that that weekend I went to W.H. Smith's, bought a Collins French dictionary and the whole verb book, and I read it again and again all weekend.
Really?
Right,
Okay.
and then a few months later I topped the class, so it was kind of interesting.
Whoa,
I mean, and that wasn't because I've got photographic memory or anything. It's that she said it couldn't be done, and so when someone
button someone presses,
when someone tells me it can't be done, actually it kind of presses a nascent button where you want to prove that it can be done. Obviously, intuition's a big part of this as well, because whenever I haven't listened to my intuition, things have always gone wrong. So I actually use intuition a lot as well, even though sometimes it goes against what could make logical sense. But a lot of what I'm doing now stems from that. And it doesn't directly answer the question of the bridge. I mean, that came much later, by the way, where I was technology illiterate when I left university. I could barely use Word and a spreadsheet. It was the early days of Microsoft Word in 95, right? Yeah. And then I ended up at Reuters, which is now Refinitiv, but the data business, and the tech guys didn't know about business and the business guys didn't know about tech. Then all of a sudden you're kind of in the middle of this, and I got so interested in it, I decided to do a master's in technology part-time.
As you do.
Yeah, I mean, just because I realized I didn't really know much about tech either, and then realized, I mean, there's like lots of technology around me and I haven't got a clue about it. I look at a screen and that's about it. And actually saw the two sides frustrated with each other, so I grabbed the opportunity. And then for most of my career I've been the bridge between that, but now obviously it's interesting because it's kind of climate, which is science, and finance.
That is absolutely fascinating that you brought it all the way from your background to be able to the untapped potential. With that now, let's say that was great, us understanding what's happening in your background. Going forward into the future, what trends do you see, or what two opposing worlds are you like tempted to put together? I mean, I'll ask the audience, give me two worlds and tell him he can't do it, and guess what? He's going to do.
I'll tell you next week.
But in your intuition, what trends are coming up? What two things are you going to put together?
Beyond climate and science?
Yeah, let's say beyond climate.
It
might be climate, fintech, and something else.
Actually, it's interesting. This is It's kind of an interesting area, and I've always been a little bit provocative because sometimes it's better to say the unsaid at times. I mean, even though it can ruffle a few feathers, but that's also a good thing as a call to action. It's quite interesting, actually. I mean, I spend about 10, 12 days a month in Singapore, and I've had 200 days of travel this year up until November, and so much so it's quite nice to be in the UK and feet on the ground during December before it starts again. Obviously I should be carbon offsetting that, and I don't know, I mean, Elon Musk is going to come up with a flight to Shanghai in half an hour, so but it'll probably cost a lot, right? You know, but that's interesting. But if you look at this, there's a lot of people jumping on the climate bandwagon, don't really care about climate overall, and I'm saying to do good, it has to be economically viable as well, and it creates that kind of virtuous circle. So I'm not saying, you know, it should be charitable, although that can play a part, but it's got to be economic. But you see a lot of people in their 50s and 60s jumping on the bandwagon that have had no interest in climate whatsoever. I mean, you've been in this area for a long time. I've had an interest in it for kind of a decade as well. But you know, it's great that then the opportunity came to really put it to test. Whereas actually, it's really, really interesting. So my daughter's 17 now, and then she didn't really know what I did for most of my career, and all of a sudden now she can relate to it, which is quite interesting. And then all of a sudden that inspired her to kind of enter an essay competition for Homerton College, Cambridge, even though she's doing A-levels at the moment, and she won that. But in some ways it was interesting. She should probably email it to Trump, because it was like, okay, how do you convince someone in climate denial that climate change is real, right? You know, it's like but it's an interesting argument. But my point there being, there's guys my age, I mean, I'm 50 as of August, and there's there were ex-colleagues last night that's in their 60s. They don't really understand it. Some of them pretending to understand it don't really understand it, but actually the younger generation really do, millennials and Gen Z, and we're coming across folk that really do. I mean, you know, we were having a chat earlier. This is a prime example, right? They want to get into this space. They want to learn about it. I think this is where there's a massive opportunity to bridge a lot of the value that's been created, and now we're kind of in a bull run again on the Web3 side, back into the Web2 side, back into the community side, back into Uganda. You know, whether it's conservation, whether it's agroforestry and other areas. And there's going to be an unprecedented opportunity. I kind of give it the term, climate's one subset of that, but I give it the term decentralized science, or DESI, DESCI, you know, rather than DESI, which is an Indian origin, right? Which is, you know, right. But we're going to see that. I mean, there's projects that some of the layer ones are starting to look at, and we're involved in that as well. Going to create, climate's a good starting point because it's well understood, and there's a level of asset generation that can happen. But we're going to see that then. You
know what? It's nuts that you're saying that.
Yeah.
Climate is an asset generation. Being able to say that 10 years ago, people would think
they were crazy. I think they still do. I mean, my ex-colleagues last night thought it was bonkers anyway, but most people do. But that science aspect, you're going to see that transcend into other areas of science, where how do you create value, asset value in this? And actually it's going to lead to a lot of investment from the Web3 side. And I wasn't a crypto guy, you know, I'm not sort of a crypto bro, I'm probably too old for that anyway, crypto granddad, I don't know, but not quite that either, somewhere in between no man's land, but you
crypto daddy, there you go.
There you go, crypto daddy. But it reminds me of that brown sauce, you know, Big Daddy here, instead of HP, the second best, right? But you're going to see a lot of value come into these sorts of areas, and that's going to generate a lot of innovation actually. Yeah. But it's going to be this generation and younger that do it. But the wave's beginning to start now.
It is, yeah. I got an inquiry the other day, someone wanting to convert sea turtle landings into tokenizing it into its own asset, so that and they showed me full tokenomics of how they're thinking of that. But how sea turtle landings has a whole economy around it.
Yeah.
And so, and then there's other projects we've seen where they want to grid conservation national parks. Yeah. Grid national parks, so cubic area is then created into a digital asset.
Yeah.
So if you hold that asset, you're actually stewarding that plot of land.
Yeah.
So there's lots of really inventive ways of people looking at how to assetize things that 10 years ago you just wouldn't dream of.
Yeah, it's really interesting, and actually, that's an interesting area. Now we're having conversations. It was unintended. I mean, we engage now, and this was at COP29 recently as well, at sovereign level. There's a Ghana announcement and others, but we're having. We kind of said we need to engage with kind of countries that either have the money or capital or technology transfer, and engage with the countries where you can sort of generate real value out of the projects as well, because one without the other doesn't really work. But we're engaged with one country on the developing world side. Again, it'll come out in the mix, and they're trying to create a whole green construct around this that sort of links traditional finance and more decentralized finance. But it's interesting because most people that are doing that are doing it with more of a wholesale bent, i.e. non-retail, but they want to link that to consumers getting value out of their own behaviors. We did a pilot a year ago at COP28 where we worked with Zilliqa as a blockchain, and we showed that some of their brands, where instead of loyalty, consumers could earn effectively points that could translate into money that went into projects as well. And that was incredibly successful. But now you've got this particular country that's looking to take it one step further and create economic value for the consumer out of green behavior and green actions, with an economic model around that, which is all I can say. But this is incredibly interesting because some of the things that they're thinking about we hadn't thought of. But 1 + 1 always makes 11. Maybe I was bad at maths, but when you combine kind of what we've done and what they've done, it genuinely creates new innovation. That's where collaboration again is key.
So what we're doing, assetizing behavioral changes?
It's interesting. I mean, it does incentivize behavior. It puts a value on that behavior because, as you said at the beginning, what's in it for me? I'm not motivated by money. If I do something that I enjoy,
so naturally,
naturally. I mean, it's kind of interesting. I never took the highest paid job, but I wanted to do the thing I really enjoyed or that was challenging, and then the money naturally followed because you're doing something that you
does
enjoy.
that work? Stop you there.
It's worked for me. I don't know. I mean, if it's worked,
because it
no.
Because that's a big question.
Yeah.
Do I do something I love, or do I do it for the money? And when I've made the money, I'll do something I love.
So pragmatically, there's a balance, because if it's something you love and it can't pay the bills, then it's difficult, right? When I graduated, I got 3 job offers. One was in insurance, but it was incredibly boring. You went in, when I go into a room, like I work off the energy a lot as well, and I thought, I really can't sit here all day, I'm going to fall asleep, right? And the other one was on the fund side as well, but with State Street, and I found that quite slow when I went in, got a feel for the interview. And then Refinitiv, which was Reuters at the time, I found it energetic. It was kind of dealing with real-time environments, and that was not to sit on the fence, but it was the one in the middle rather than the lowest paid one, which was insurance one, and then the funds one was the highest paid. A friend of mine went down the funds route, got the same job offer. We both graduated, and we kind of went down our different paths. And he's a fund manager these days, but bored of it.
Bored of it?
Bored of it. Almost wants to do something else. Midlife crisis, hasn't bought a motorbike yet.
I just want to dwell on that bit. There's a question I have dwelling on that just a bit. When people say, do something you love or passionate about, is it actually what you love or passionate about? Or is it something that says your brain's just predisposed to doing that one thing better? And so you feel more comfortable doing the thing what you perceive as I love it, but it's just designed for you, versus something that you're working upstream.
Yeah, I mean, that's a really good question, actually, because I was actually thinking about that on the way here, actually. So it's like, it's
great minds, eh? Great minds.
It's a raindrop on my head with a listening device on it or something weird. I mean, that's a new technology. We'll probably invent that next. But it's interesting because everyone talks about, okay, you've got to be innovative and you've got to do something that no one else has done, actually. But you've seen, actually, a lot of the things that have emerged, I mean, a bit like the stock exchange example I was giving earlier with what we did, it was taking something that existed and doing it way better. We used to call that cheaper, faster, smarter, right? And then using technology as the enabler now, which is even transforming our day-to-day work. I mean, I still like to write things down, but the amount of AI capture from meetings, whether it's Zoom or otherwise, or played that I use now, some of the things that even Chat GPT can do. I mean, I don't know where the data is going, but we'll find out. It's being used against us, but that's another story. But I mean, some of these tools are really interesting. So I've always found actually looking at something that you perceived as broken or not quite working, and fundamentally making a difference, not just a real tweak, but disrupting the model in a way that you reinvent it, has worked for me.
Wait, what do you get from that? What's your kickback?
Yeah, it's interesting because I mean, there's a lot of paper value what we've created, but when everyone talks about money, we've had the opportunity to exit multiple times.
No, but I'm looking at an emotional.
Yeah,
kickback.
but going back to the point, it's not money, because in 13 years, everything I've done, we haven't exited. One, it's the intellectual challenge, and it just activates the mind in a very different way, because I got very, very frustrated when I joined Reuters, because everyone was kind of tunnel vision and just thinking vertically. And then I decided actually you could join the dots horizontally. So it's almost like writing the playbooks. And again, with what we're doing now, no one's written that kind of carbon credits for dummies. Although there is a book coming out that I've got a chapter in, which could be quite interesting, but it's not yellow, like those books. It's like so. There's that. So it's the thing is, I mean, let's say all of us in a room now. You put us in a room all day. We're going to come up with some levels of innovation, even though our backgrounds are very different.
Yeah.
Yet we don't tend to do that.
Not at all.
The bankers sit with the bankers, and they know what they know. Everyone's moving jobs. It reminds me of a taxi driver moving from one car to a different car. I've got colleagues or friends from university. All they've done is like the fund manager from one fund to another, and it's just the same job.
Yeah.
Really monotonous and boring. And I think keeping the mind active is key.
Yeah. But it takes a lot to break out of that kind of safe space, even if it's a rut.
Yeah.
To suddenly break out of that to do something that is a bit more challenging, unless you really love that. Really. Gives you a strong kickback if you're going in that challenge zone. But I see that you just live in that challenge zone versus the rest of the world of like, I'll just stick in the rut. I know what's going to happen tomorrow.
Yeah, it's interesting. I mean, my friends and family tell me that every time I de-risk something and it becomes kind of stable, from a venture perspective, I pretty much quickly create a new one that I'm involved in, just because I don't think, I mean, I've got a good team that work with me and around me, and it's all about the team collectively, but I don't really like just keeping the lights on. You want to see what else you can do, and it doesn't necessarily mean that particular thing, and then you do things for the sake of doing it, but that spurs me on to do something else. Can have a lot of the lessons learned, but it could be something completely different in a completely different sector.
Excellent. I've got a final question before we open it out to the audience on AI. Someone spoke to me about AI. They were only yesterday actually having a conversation where someone actually said, AI is going to take my job. And I'm like, well, AI won't take your job if your boss doesn't understand it.
You're right.
So you're safe for a while if your boss doesn't understand it. But I'm feeling that with Gen AI or Genetic AI coming about, I'm hoping that human beings would rise to the occasion and go, you know what, we've had it good for a while. Now it's time to up our game innovatively, creatively, so that we're beating the machine. So the machine can cover all the repetitive bits, but we're doing something next level that a machine can't do. And purposely, I've got 2 daughters and teenagers, and right from the beginning, I said, it was about 10 years ago, I said, I changed school from just going to your normal state school, and I said, you're going to go to an art school. I want you to do something that robots can't do. And move them into something creative, and move them into something far more vocational, just completely different. We're testing each other, exploring that space. But do you agree? Second, what would be that next human evolution in the mind? Could you identify? You're probably the best person to ask.
No, this is it's a really, really interesting question, because I wasn't very popular at the Christmas party last year. Surprised the teams invited me again. They've probably given me the wrong location, actually, because as we were sat around the table, I asked them how many thought their jobs were going to go because of AI, and when, and in what form, and it triggered the same debate over the lunch table. as we were having a long lunch that went on into the evening, even after we were thrown out of the restaurant. But it's interesting because lawyers with standard legal agreements and templates, accountants, you saw that with actuaries as well. A lot of friends that I studied with London School of Economics went into actuarial science, but then a lot of the programs started to take that over even ahead of AI coming in. Now on carbon credits, you've got something called project development descriptions and other things, but actually a lot of them are very similar, even though the country or the project might be different. But now there's AI being introduced into those as well, which took someone months and months of work, but now they're generated very quickly and you can tweak them, right? So all of a sudden it's actually creeping into our day-to-day faster than we envisage. It's really, really interesting because even though there's a large proportion of technology people in my firm, I'm trying to get them out of their comfort zone because the technologists, AI technology folks as well. Some of them, it's like they know what they know and they know what they've learned and what they've been doing for 13 years, but and some are okay, but it's a smaller proportion that are kind of reacting to this change. But I'm trying to take the others with us, right? And just because they're scared of it, actually. I mean, it reminds them of the Terminator movie all over again. We speak about movies, and so it's really, really interesting because I had the same discussion with my daughter as well that you had said, you've got to make sure that you do something a bit like this type of interaction, right? I mean, if a machine was sat here, maybe it'd be more interesting than me, right? Once it's fed in the data or whatever. But actually, roles that need to be client facing, it doesn't mean they don't involve creativity or anything like that. But that kind of human interaction, I think, is important. Although maybe with the younger generation, they're always on TikTok and maybe they want to communicate via their devices, right? Dating apps as well, right? These days.
I kind of prophesize that the world will be a place where you go to a restaurant and you go to a restaurant, or your mate goes to a restaurant, comes back and goes, "Oh my God, they had great food and they had a real human waiter."
Yeah. We're seeing that in Singapore. Whenever I go, there's more and more automated robots. All of a sudden this random robot turns up, with a tray alongside you. Am I supposed to take that? And so you're beginning to see that. I mean, not quite AI, but supermarket checkout now as well. The question then is, I mean, we saw this with the first industrial revolution as well, where the machines came in, and there's doom and gloom about, we're all going to be made redundant and the machines are going to take over. You're absolutely right. It's all right. How do we stay ahead? Because it's interesting. I mean, some of it's really interesting. I mean, I don't know if you saw that thing with Minecraft, where they set up this kind of universe with AI bots, and some of them are even learning how to defraud and stuff like that and things like that. That's really interesting, right? But at the same time, a lot of the initial data has come from us. I've tested ChatGPT and other things. We've got to keep innovating. Now, what form that takes can be any which way you want. And I think there's no substitute. I've traveled a lot because a lot of the work we're doing in emerging markets, they say, we want to see the whites of your eyes. We want to interact with you. We want to understand who we're dealing with. If you go to the Middle East, like US due diligence is very different. You'll have a VC on Zoom and it's like, great, 1,000 questions. You go to the Middle East and you speak to investors or partners, they'll sit with you, they'll have tea, they'll eat with you, they'll get to know you, they'll talk about family, and then they get to know you as a person because they want to know who they're investing in, which is people. And I think that's not going to go away anytime soon. But obviously it'll encourage some interesting debates.
Yeah, fantastic. Oh, thank you so much for your time.
Pleasure.
I'm going to open it out to the crowd. Any questions? Wait, go ahead.
What is one of the biggest character traits that someone can have that invites investors to be quite interested?
Yeah, I mean, this is interesting. The bane of every entrepreneur looking for investment. Actually, it's interesting. I mean, it's varied because I found out I can't really stand venture capitalists, right, or VCs, because they want it de-risked to zero with some of the terms and conditions, right? And they just want a free lunch every time. Whereas I've come from a world where you want to risk share. I mean, so much so that I've said that when I have an eventual exit on some of the things that I'm doing, I've struggled as an entrepreneur because you've had sharks everywhere, right? Trying to get the better of you. Shark Tank, being an operative word. And I actually want to help entrepreneurs that, look at what they're doing and kind of mentor them and then create value with them, but on fair and equitable terms. A bit like the carbon credits example, you sort of spoke about what to do next, because I think it's heavily weighted towards the investor against the investee, and it's not necessarily fair as well. So that in itself is going to be interesting. I mean, we've got to affect change there. I don't think the model's working. I mean, you were speaking earlier about what you're doing, and I'm sure you've got investors and backers and scale it. There's a minority of investors that we find that really want to live the journey with you. I mean, when I get investors that we're dealing with that then speak about, they start with the Excel spreadsheet and the model, I switch off immediately because they don't really want to understand what we do and how we do it, right? So, I mean, in that sense, I'm always looking for those that are genuinely interested in what we do, because otherwise, I mean, they say, "Oh, we've got a network and we know everyone." I said, "Well, it's pretty easy to get to anyone you want these days if you really want to." So I think that's key as well. I don't know if that directly answers the question, but
I'm finding actually a lot of startups. There is a change. I hate VCs, liars. But I'm finding a lot of
no VCs in the room.
No.
We'll get shot later.
But
drinks are going to be spiked.
But I find a lot of startups are picking up companies, corporates that lack innovation, that look at the startup saying, "I need that. I'm going to invest in you. You come," so they can absorb. So it's like your first client. It could be your first client, but they're buying into you. They're investing in you rather than hiring you. Actually, "Oh no, I'll invest in your company. Let's build it, but build it for me first."
TomTom, that happened to TomTom's great, and then I think was it Renault or one of the car companies then said, exclusivity, and then TomTom kind of lost their nerve with it, and then all of a sudden, everything passed them by, right? Because then everyone developed the technology, whereas it could have been in every car, and that could have been the technology. So
is that the problem? It was exclusive to.
Yeah, and we've seen this. I mentioned who, but there's been a recent transaction in Australia because there's kind of mining companies, and one of my colleagues nicknames them dirty emitters, right? And they need carbon offsets, and they need to decarbonize that whole process. They've deliberately bought out a technology firm. I mean, one, not just so that no one else could have it, but basically so that the technology can't be used, right? So they've got a justification to do what they're doing without investing into the improvement.
Crazy.
So you're seeing that as well. So we talk about guerrilla marketing, but these are real guerrilla tactics, right? So the question is, I mean, I had experience of that sort of early on, where what we were doing, we were trying to take on one of the exchanges after the other thing that I mentioned that we did, and we had a large exchange invest in us, but it was quite clear they wanted first right of refusal. It made it very difficult for other investors to come into us, and then basically made us uninvestable, which got to the point where we could get external capital because we had traction. They didn't want to put any more in because there was a change of guard, and basically we had to sell the thing at a heavy discount to them, just because of the way that they shackled us. So I mean, the problem is, I mean, I see many founders getting sharks or getting offered bad deals, and it annoys me no end, actually. Just because they don't understand the small print, or they're being ill-advised. Like I know an exit where, I mean, the company sold for something like 300 million plus, and I think the founders in that transaction, even though they had a tangible stake, ended up with a few million, just because there was so many liquidation preferences. On a multiple that when you worked them all out one on top of the other and layered it, they were left with very little, even though they'd built a $300 million company.
There is a change happening in the funding space. I've seen so many startups being approached by corporates. Another question for anyone?
You mentioned that there's a lot of your success is down to the team around you. How did you go about building?
Good question.
Yeah, it's interesting because I've always managed to put together. I call it, like, I used to watch another movie, The Dirty Dozen. Do you remember that? Like a dozen. I watch too much TV, but a lot of misfits. I mean, it has an influence. I don't know, but
it pays off though.
Yeah, but again, they're underdogs, right? No, they just watch TikTok probably 15 seconds, and that's enough, right? It's like, but this was like 12 misfits, by no means, fighting fit, coming together, and then working as a team. They topple everyone, right? It's not quite Rambo, and it's at least a little bit more believable. So My style has always been, when you're younger, you work for regimental managers, and even the way we're educated is old school. We're all sat, facing the teacher, and it's like a hang up from Victorian times, which is changing steadily as well, as I'll know. I've always been about motivating the team, because if they buy into the vision, and also, when you're hiring as well, you've got to see whether they genuinely buy into the vision, because it's got to be more than a job for them as well. I mean, everyone has different motivations, but they've got to live it. And actually, even with the things I've done in the past, some of the junior team members, think of it, I call it the rough diamond effect. So I've never hired kind of existing people, like even at C-level or others, like it happened to me. You hire the person that wants to step up, but there's a chicken and egg, or you're not C-suite, or you're not head of development. But actually, no one was born that way. Someone had to become C-suite. So I always believe in giving people a chance and then seeing what their ceiling is, actually. And that's led to incredible results, actually. And it creates full buy-in from across the team, with what you're doing. I mean, there's been some great companies built, whether you like the culture or not, but the one I really liked, actually, was Bloomberg. We were at Reuters, and then our competitor was Bloomberg, yet their people, I mean, it was almost like a movement, a cult, and it was, all right, if you left, you weren't allowed to come back until Michael Bloomberg came back after he left, and then they had to change the rules, right? But they paid less than the street. Yeah, people didn't really want to leave, because they thought of it as one big family, and they all banded together, and there was a lot of innovation in there. It became more challenging as they grew as well, but they've still managed to maintain this. I do believe in meetings, unlike Elon Musk. I think dialogue is good, but we don't have excessive meetings. I mean, but we do have them, because it's good to kind of brainstorm together as a team. And I think we found out during COVID that we lost a lot of that. It's good, and even though a lot of people we're working very decentralized across 12 countries, but key people tend to meet again maybe a few times a month, or those that are working more closely together more often. And we do have brainstorming sessions.
Any further questions? Great. No, there we go.
Thank you for the great talk.
Pleasure.
I was wondering, there's a lot of discussions about how to get investments and stuff like this, but could you please tell us about your experience about the time you were approaching the clients and potential clients?
Yeah, I mean, clients are always hard to get, aren't they? I mean, in new ventures, because it's interesting. I mean, even if you built one successfully and you start again, it's going through the same rigmarole. But the biggest problem is, and this is the biggest challenge, and you kind of learn this as well, because you've got limited resources, or you might have limited capital as a startup, and you've got to go after one. You've got to build. There's lots of things coming in. Like even now, we've got hundreds of things coming in, like every month, right? But we're now trying to be quite methodical and focused around what we take on and what we can then scale. On the one hand, many times over, because then you're kind of productizing it, but at the same time, you've got very distinct use cases, even though something else looks really exciting to do. So, whereas initially, even some of the team they were trying to learn about climate and carbon, and they were trying to grab onto everything. But now there's a lot more of a filter where but we've also then, beyond those initiatives, related that to the client side as well, because we've got like a pipeline where we kind of say, okay, 1, 2, and 3, and it kind of changes regularly. But we're trying to focus on a level of consistency with client types, and then we've broken it down into 4 distinct client groups. Like for us, it's sovereign governments, which are challenging. It takes time. Deals are done after 12, 15 months, but when you do them, then the infrastructure is there, and everything in that country going out and coming in can harness the infrastructure, and you can leverage kind of projects and assets. The other one for us is kind of traditional financial players, and I was very comfortable with that initially. So I had a big Rolodex given what I'd done before. Sovereign governments we hadn't, but it just so happens that through contacts and like the way we solved that was we did joint ventures in country after good due diligence, because you've got to be careful in some of the emerging markets. So all of a sudden, us going and knocking on the door would be near on impossible, but rather than have 100% of nothing, we then said we'll have 50% of something, or we might have 60% of it, or 40, whatever the joint venture was. That's opened up markets like Saudi now, which are incredibly difficult, even though we haven't announced specifically what we're doing there. separate Ghana, which we've announced, Kenya, Uganda. So the joint venture approach has been good on the sovereign side. The financial services side it's more straightforward, but those financial services players are least resistant, even though you hear about banks. A lot of them are financing, making a lot of money in oil and gas as well. And HSBC recently said they're pulling back on carbon asset financing and carbon trading, but they hadn't even started in earnest. But it's quite interesting. But that said, we know how to reach out to them, and we're trying to build financial structures that they understand, because the banks want risk packaged in a way that they understand. And then the third type is corporate investors, and we had no clue. I mean, I'd never engaged with the brands or with Vodafone or anyone else like that. And with that, again, it was dealing with limited sales team, but dealing with partners who have and sharing in the value of bringing those clients on, which then has accelerated what we're doing with them. But rather than go in, there's so many startups and other people that come to us, they're selling something, but they don't really have anything to sell. So we made it quite clear for about a year and a half, 2 years with what we're doing now, where we built out solid use cases. We kind of tested it with friendlies and then delivered on those. And meanwhile, we were generating a small amount of revenue from like carbon trading and other things that kept kind of oiling the wheels. So that's kind of the approach. Kind of focus, I think, is important. I mean, it's overstated at times, but the number of startups that are hitting the wall just because they've gone everywhere, they've kind of gone off-piste.
Anyone ordered wine?
Not me. I'm off.
Great. Any other questions? Fantastic. Well, I'm Afsal and had the pleasure of speaking to Hirander, modern day eco warrior, and we're done speaking. Thank you very much.
Thank you very much.